Hey, what's up, guys? This time, I'm going to make sure I record this. And if you guys hear some background noise, just like, it's just, I got a busy household right now. So, anyways, how's everybody's weekend so far? We can talk in the stage questions. And, right now I'm just monitoring my fantasy football teams and looking at stocks, you know. So I got the request to do this class because people that are using my algorithms are still kind of confused and just clarify some things, but I'm not I don't really want to push it towards like the whole algorithm training in a way, but more of us like going over some stocks and stuff, and then I can provide some levels for you guys. So in this stage questions area, just present your questions there, or stocks that you want me to take a look at. But anyway, so yeah, my name's Thomas. I go by Links. I run a server myself. It's for the product to teach people how to use. It's not really a community that we utilize as a trading community, even though we I do have a small group in there, but we're not that active. So when it comes to the algorithms, that's what we're based on, and that's what we try to convey to new people. And it's a challenging thing. The algorithms, for one, can be overwhelming for new traders or new, people that knew the indicators and stuff. And then for older traders, they can be kind of against their bias opinion because of what they've been using. They will, slam their fist down saying this is what works, and I'm going to use my old system and compare it to your system. Unfortunately, that's just not how it works. So things we're going to break down. Um, it's just kind of talking about what really works and what doesn't work at all. Okay, so you know one thing I hear a lot on YouTube and from different trading gurus and all that is, as humans, we try to tell ourselves that consistency is key, right? Be consistent and we will reach our goal. Okay. But does this work for finance? Is that in the same category? Right. So if it was something unrelated to that, right? Like your health, maybe you want to lose some weight and stuff. If you stay consistent at it, you'll lose that weight. But that's a whole different, mental situation going on compared to the finance world. And I believe people try to correlate that same kind of system into the finance world, and it just doesn't work that way. So I'll give you some examples of where people think consistency is what they're using for their trading. Okay. So the first thing we cannot do is we cannot predict price levels. And we usually end up losing more than we made, right? Um, and the other thing with like inconsistencies is, or, trying to be consistent in trading is we try to create these mental models, if you will, right? So, like, news comes out. So we plug that into our brains that that's going to have some kind of effect on the price. Okay. The other thing we look at is certain technicals, right? We plug that into our brain and we think that's going to have some kind of effect on the price. And you start building like more and more of these mental models. And before you know it, it's very, very hard to be consistent with those, right? Plus, why would we want to put that kind of pressure on our portfolio to try to be consistent? Why would we do that? Um, so it might seem like it works, right? Like one example of consistency is a stop loss, right? They say, well, if I somehow can manage my risk, i.e., putting a stop loss, that will make me consistent, right? Because I can cut my losses and then I will be consistent. Well, people cut their losses using a stop loss, correct? For the most part, right? For options, some people might do averaging down, okay? Meaning that the price that they got into, the direction starts changing, right? It starts going a different direction and it challenges their position, which instead of just leaving that position, they try to average down on that position, right? But what happens is as soon as they start averaging down, the price starts moving back up again. So maybe their direction was correct, but because they're using these placebo effect, ineffective risk management strategies, it's it's creating more problems than it really is, right? And the biggest thing that you can do is if you're questioning putting a stop loss, then you're probably in the wrong position on your entry. Because if you're in the correct position, then you should know that your direction is you're going to make profit. Now, when it comes to realistic profits and unrealistic profits, that's a different story. And really, if you're looking at unrealistic profits, right? If you're looking at those profit targets, um, you're already kind of setting yourself up for failure again. So again, that runs right back into the consistency thing, because how can you be consistent if you're looking for high profits, right? So as we try to figure this all out and we go by what other people are saying, we then get more confused, right? Because at the end of the day, when you place that trade, you're gambling, right? Because you have no idea where the price is going to go. So we tried to create these fake systems to somehow fix that for our minds, right? Um, so when we go back to the algorithms, what the algorithms do, right, is they create a probable solution for your brain. Meaning, because we know statistics works, that we can look at the price area on the algorithms that I'm about to show you guys and get a statistical advantage versus using some kind of trend uh, strategy, right? So if you start learning that statistical manner, then your risk ratio, ward ratios is going to be higher. right? Because the more times that you buy in the correct probable areas, the higher chance that you're going to have a return from that. So, but when you start mix matching different strategies, that's when you really start losing money. And you'll hear these fallacies of, when you first get into day trading, you're going to lose money, right? It might take you a year to get out of it, and then you'll start making money. The truth is, you're always going to lose money in day trading. Okay, even if you have a short term win streak and you're up, 1,000%, you already lost in the beginning, right? You didn't come out hot. You were already losing when you first started trading. So you're actually trying to get back to zero again. So then when you get over zero, and this is where the whole consistency is, right? People think, oh, because I have this said strategy, that now since I'm going to be consistent, right? I'm not going to make the same mistakes, that I'm going to grow my account, and I'm going to profit off that, right? I wish it was that easy. It's not though. And it's a it's a blatant lie that retailers like get broadcasted to them, right? One of them is the retail brokers are broadcasting all these free solutions, right? Free strategies, and it's like a trap, and it just herds all the cows that get slaughtered. And there's no control of it, because people are still doing it, because people have gambling habits, right? Instead of trading like a responsible fashion of just growing your wealth, right, compounding your money, they look at it like gambling, and I think that's the real misconception. So there's a lot that goes into that part, as far as why we have retail brokerages, and what they're really used for, versus like where the true profit is made, right? And really the true profit is made by a buy and hold strategy, because prices will continually go up. But if you're getting into a stock or a company that has a high return versus a low Sharpe ratio, your likelihood is not going to be probable gains in the future, right? If we pop up a chart like Tesla, where it goes up super high and then it drops down really low, that's not probable gains. You actually lose on those type of companies more than you win. So quantitative researchers look for a higher Sharpe ratio, right? And it's easy to find Sharpe ratios on these companies. You just have to Google whatever company you're looking at to invest into, and see what their Sharpe ratio is. Anything that's over one is a good thing, right? I believe SPY right now is it's about 2.3 Sharpe ratio, so that's really good. Now quantitative researchers have Sharpe ratios that go all the way up to 8, which is insane, right? That's really high. So they don't really look at the high return, right? They look at the Sharpe ratio. So just a little backdrop of how finances, like how prop firms really make their money versus how retailers see it, right? So with that being said, let's go and look some examples of how using the bands can have a more probable outcome for rewarding versus using some kind of trend, right? Now, if you talk to a lot of quantitative people, they'll tell you that technical analysis is garbage, right? And in some aspects, they're true. They're right on that. Um, and it's because most of these technical these indicators, these strategies already exploited. They're already been overused. Um, uh, and it really makes sense, right? Like if you were to like get a moving average, a 200 MA moving average or whatever, and your rule is every time the price goes over the 200 MA, you buy. Every time it goes under, you sell. Okay, so what if that was like the only strategy in trading? Well, it would get destroyed immediately because someone is trying to get their fill in faster than the other. And if everybody's using that same strategy, nobody wins. The strategy collapses on itself. Game over. A lot of these public indicators that are free, that are readily available anywhere you go, is their collapse strategies, right? And there's this the mental models, right, of events that happen, and they use those indicators as like, aha, see, it was right, but really it had nothing to do with that. And that's where the real like trick or the trap happens. So anytime you write indicators, or you have to do a lot of back testing. So the bands, for example, 6 months of back testing to get to qualified levels that I feel were going to give me probable results, right? Or higher probable results. Um, the other indicator down here that you see, this Omni range, I mean, this thing's been testing it for about a year. So there's a lot of testing that goes into this work to really make it work, right? Um, so, and the reason why I'm saying this is I don't want you guys to get off track. I don't want you guys to spend all your energy looking into all these publicly free indicators just to get burned anyways, right? So it's kind of like me giving you guys the red pill saying, look, this is how it really is, you know, and you need to swallow that, and then let's learn how we can work to be successful, right? I don't see day trading as a career. Okay. I see there's a lot of other jobs out there that make more money than day trading. Short term, yes. But again, it's back to that like, how long are you going to day trade for? The results are still the same. You can day trade for 5 years. You're going to lose more than what you gained, right? And the people that are actually making money are mostly people that are selling courses, right? So they say, "Oh yeah, I took a hit today on my day trading, but I'll get it back. I'll get it back. I just got to be consistent, right? I got to make sure my emotions are in check." What? What are you talking about? Like, first off, there are no emotions in money and values. Emotions is like with your marriage or your girlfriend or boyfriend, right? Those two do not correlate together at all. Period. So when someone's like, "Oh man, I was emotional. I shouldn't have got into that trade," it's because you don't have any information on why you got in the first place or why it went down. You don't know. So that's where it creates this trap. And the best way that I have learned to solve it is with statistics, right? And we use statistics all the time. Um, so the bands are basically a statistical measurement of where price could go. Okay. And just showing an example here, and I'll remove the pepper one because that could be confusing to people. So we're just showing this longer band look, right? And if you guys use these or seen them before, um, they're not as popular as like their appeal factor or whatever is not as popular if I have it set on this. But if I throw the variance and stuff on there, then there's a little more information. But we could still get some information off this particular sample here. And what we're learning even about Bitcoin is that it likes to bounce in these third deviation levels. right? Even if it doesn't bounce for a long time, it still goes up regardless. Okay, so what I've taught a lot of people is there is an 80% rule on these bands. Okay, the 80% rule is pretty simple. If it's in the green bands, there's an 80% chance that the price is going to go up. If it's in the red bands, there's an 80% chance the price is going to go down. Now, obviously, prices get into the so-called trend movements or whatever, and the price will keep moving in the red bands, and the same thing when we're talking about in the green bands. But instead of calling them trends and overbought and oversold, if we want to get into the cognitive side, because I know that quantitative people use cognitive in their models, we can look at the greed up top and the fear in the bottom, right? The fear is when people panic and they panic sell and then they get out of those as quick as they can. And then someone else buys it, right? And then the greed here is people are buying in this position right here on Bitcoin, even though they could have bought right here and made more, they're buying right here and they're getting greedy on this position. And it's only a matter of time before it drops again, right? So obviously this is a 2-minute time chart or time frame. So that result might be a little different if we go to a higher time sample. So 80% rule, that's the number one thing that you want to remember when you're messing with the bands. Okay, does that make sense so far? And you guys can unmute your mics, like it's fine. As long as you don't have like whining babies or dogs barking. But that's where, a lot of people make that mistake is they start holding too long. So let's just say, right, if you just practice the deviated mythology, right, where all you're going to do is you're going to buy in the green, you're going to sell in the red, you're going to buy in the green, you're going to sell in the red. Won't you have a pretty good probable profits? Yes, right. So the issue is though is people don't know when to get into those injuries, right? And some of them are using different, different algorithms that are telling them different things. However, the more people using the algorithm are going to have, there's going to be more issues with it being, a good strategy or not. For instance, here, right, we have our VWAP. So VWAP is very popular. The only reason why I'm using the VWAP here is because most stocks revert back to the mean. Okay, so we're using the VWAP as a middle ground, basically, right? And that middle ground for probable areas is 50%, meaning there's a 50% chance it goes up or down. Okay, so it's a very noisy area, right? And you can see even on this chart, like this is a super hard thing to trade. Okay, so it's easier to trade off the bands here, and on the lower bands than it is to even deal with this. But the reason why I have it on here is for whatever reason, sometimes we get this bullish sentiment when we go over the VWAP, right? And that creates this more surge of extra buyers coming through. Okay, so what we learn from those areas is either there's two things we can do. When it hits the VWAP, we can take profit, right? Or if it holds above the VWAP, we can continue holding until we get to the red bands. Okay. Um, the rule of thumb for VWAP is 2.5 bars. So 2.5 candles, it goes over that. And like for the instance, these candles right here, you got two here. You got 1 and 2, but it couldn't pass the second one here, right? So it had to do 2.5 bars to confirm going higher. That's the rule, at least for VWAPs. So with the information that we have provided, it still doesn't give us like solid evidence of exactly like where Bitcoin's going. Okay. So there's a couple methods to these bands that you can use. One is called the time frame variance. And the time frame variance is basically a more varied level of statistics, where we're looking farther out at more extreme levels of price versus at a shorter time frame. See, the real issue with traders is they're looking too short on a period, right? And that area is just, it's attacked way too many times. So I sort of look at my bands, at least the variance version, like a whale, right? And like the small bands here is like a little fish or something hanging out with him. But he's the one that really controls this price structure, right? And this is where we're going to calculate more profit if we go off this guy than we would if we go off this smaller fish here, right? So that's sort of how I like to illustrate it to people. And we know that there's going to be a bigger price, conclusion once we get over this particular level here, based on what the historical area did before, right? So if we can, if Bitcoin can test this area again and it gets over it, then we can start seeing higher highs for Bitcoin, right? So we've been going sideways, consolidating, squeezing. And for me, a safer trade would be up here than getting to a trade right here. And it goes right back to the same rule of it getting into the red bands, right? And a lot of traders will go heavy on their positions because they see the movement is it's really pushing up, so now I got to get into it. And that's where mistakes are made, right? So since we see this new resistance level that the variance is creating, now we have a new level that we could watch, right? So that's one example of using the bands to look for stronger support. The other way you can do it is using our omni range down here, right? So the omni range is, it's more productive, if you will, when it comes to managing levels where price is either going to reject or bounce, right? And you could see that it reacts, when it reacts to this level here and it started dropping immediately, right? And it got into this medial area on this range zone. And it wouldn't allow the price to go up until we had a little bit more, momentum, or the range started breaking out of it. Then once that happened, there was a squeeze that happened through here, right? So then we can use this level here as a support, right? And then once it cracked below, though, it cracked above, there was another line that rendered. And see, now our window got really small, right? So we didn't have that big burst that we were thinking. And because it kept retesting this support, we knew that this level was getting weaker to eventually where it actually broke. So how we can obtain information at its current price level is looking at these previous lines, and we can plot those down, right? So if we wanted to, since it's moving up right now, we could use this as an area of support, and we could plot a line there if it lets me. Okay, maybe it won't let me. What? Um, right. Why is that not working? Maybe it is working, huh? Okay, there we go. So all I'm doing is I'm just plotting this previous line right here, right? And we also have another line up here, resistance line. This is just not going to work today. So we'll just do it this way. So we have these two levels right here, the 63,000, and then we have the 66,000. Okay, so this is on a 20-minute time frame. So it's a lot longer for these plays to happen, right? So then I'm going to go to like a 2-minute time frame, just to see if there's any identifiable areas for support. So we have a couple. So we have this level here is our main support, right? So we can plot that one down. And then we have this as our resistance level. So we can use that line right there. So now what we've done in a very quick fashion is we've created new levels here, right? So say if we got into a lower entry on Nessie through here, right? Or sorry, Omni range, that's the new name for it. We would look at this level here as an opportunity to buy. If our assumption is it's trying to push up to that variance that we were looking at, which I believe was like 62,000, right? 62, yeah, 62.7, right? So it's about right in between that 63,000. So those are the levels that we're looking at right now if this thing wants to start squeezing. Does that make sense to you guys? Make sure. Excuse me. So the time it takes to get to this level, right? It really depends. I mean, it could happen really fast, or because it gets into the red bands, it's going to reject again and try to squeeze up and try to push through this resistance here. So, but we know this is one area of resistance, but we were able to get this information off this 2 minute time frame rather quickly, right? So those are kind of things that I look at if I'm in a trade at that current moment, right? Where I'm looking at these previous resistance levels and seeing if we can break above that, and then where the next resistance level would be. So that's where that 62.8, 62.7 is, which is right here. Okay. Then when we identify something like this, right? For example, then we're looking at our risk to reward ratio. We're looking at if where do they want to like take it to, right? Like what makes more sense? And because this is Bitcoin, it's a little different than stocks, right? But or equities. Like if you let me see if I can change that color here. Blah, 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 boom. All right. So if we look at this level here, and then let's also take a look at this level right here. Okay. And now let's take a look at this level as well. So what we look at though is what is the price, difference between these two levels here. Okay, so we got about 4,000 so right here compared to this 58.6 to 62. So we got $4,000 zone right here if it wants to continue moving up, but we have a really tiny window for profit right here at the moment. So this is why it's been going sideways, because of that. Those probable areas aren't the best. So we will make more profit once we get above this line right here versus getting into the entry right now only to be hit by this resistance level, right? But if it rejected this resistance level, then maybe we could take more profit selling it back down. All right. So that's another example of how you can use the bands. And let me blow the bands back up. And since this is moving rather quickly right now, we can probably obtain some more information. So here we go, some more information. Same thing. It bought on these lower green bands, that 80%. Now it's in this probable, you call the 80% for a sell to happen. So this is a big test for Bitcoin at this level right here, right? For an actual breakout. And you guys can't see that line, but because it's white, let me actually take it the right color. Here we go. So you can see there was already a rejection, a real tiny one, where that wick formed, right? So it has to break through this, and it has to carry on to see if it can get to that next level. All right. So there's a lot of information. And one thing we want to also acknowledge too is Bitcoin has been a little bit on a downtrend, right? So when it took profit up at 67,000, it's been downtrending, and we can see that on the bands. So if this is a true reversal, right, this was what we'd have to break through first. And then I think we'll get into another squeeze, like something stupid, another squeeze, something like this or something, right? Where it's going to try to break out through this area, or it hits this area, consolidates, and it might drop down again. So that's why we just have to be real careful with our positions when we're in the red bands. And the only time that we would take advantage of the situation is if it's over the variance on this bigger picture right here. So hopefully that's not too confusing. And you can go on, different time frames and stuff and see if you can get a better confirmation on what's happening, right? So there's a candle that's happening right now. It's got, 40 minutes left or whatever until we get a new candle. So it's trying to break through, and you can actually look that this was a strong resistance before, right? So they had their initial sell, and you can actually see that line's pretty accurate, isn't it? So we can see where there was hesitation through here, right? And then the sell was still happening because of that 80% rule, especially on a higher time frame. Like when you see stocks all the way up here in the red on a higher time frame, it's a high probable that it's going to sell. All right. Now, the thing that can get confusing though is you'll see something like this in the red, right? Or it's in the red right here. But when the price gets all the way down here on this line that we see, this is the green bands on a lower time frame. So it's really depends on what entry you want. Do you want an entry down here at 43,000 like what they did here? Or do you want to try to continue an entry right through here? So that's sort of what the narrative is, right? So they've broke through this level, okay? They kind of overextended a little bit, and they held a support through here. They held that support because it was probably in the green bands right here, right? And that's where we got that short-term buying thing happening, which is fine. Then we moved up, and now we had that rejection, and now it's trying to test this resistance here. Now, if it breaks, then we know our next level would be 58,000. So the real question is, on this particular chart, your ratio for what's going to give you more profit. Well, I would say if this breaks this line right here, right, we'll just steal this one. Wouldn't that be a better win? So if it can't get above, if it breaks this line, this price like this, Jesus, wouldn't this be a bigger reward? Because true, we do have like a little bit of room to go up, but it's not as much money here, right? Even if it got to the second deviation at this 70,000, it's not that much money. So those are things that I look at as well when I'm evaluating if I want to get into a longer term position. Well, a lot of people are talking saying, well, Bitcoin is going to hit 100K. Okay, well that's people talking. They don't know for sure, right? So we can't just go off that assumption. My wife was hooking me up with a sandwich. So we don't want to go off that assumption right there. Okay. Um, if I'm looking to get back into Bitcoin, if this does drop below this 58,000 zone, I would be looking down here somewhere. So we'll see what happens, and you can see what is occurring right now is a little bit of what I like to call a variance squeeze, where you can see everything tightening, right? The price is tightening, everything's tightening real close. This is where big moves happen, right? So either Bitcoin wants to go nuts and climb all the way up to whatever we can see on this chart, 77,000, or Bitcoin rejects these levels still, breaks 58 and drops all the way down here. So hopefully that kind of makes sense. You can see another level right here. And what we can do too is we can mess with the variance levels, right? Which is called the variance multiplier here, to check different levels of support and resistance. And it's really easy. You just have to move it, right? So you can see this is a pretty strong, like the critical support right here. Like if this support breaks, it's got to drop. Okay. So we can just confirm that level. See it's staying in the same spot. That those bands didn't really change. That support didn't change. So we try again. See it staying in the same spot. They're all about in the same spot, except right there a little bit. And then we're getting into, the lower zone where we were talking about the profit hitting down like 44 or something thousand. So that's kind of when I look at, right? Oops. Jeez, man. So does that make sense right there? Let's get into something like Tesla, right? Which has a high RET. So all these lines that you see right here were plotted by the algorithms. I mean, I plotted them, but according to what the algorithms were telling me. So we can still look and see that there is a little bit of room trying to get through this level, this last level of resistance, right? So you can see how it's been conquering this variance. And if we just remove these lines and we look at these little red dots through here, right? You could see how the price was moving into these red dots through here again, right? And it's trying to get through this stronger wall of resistance. So if it broke that wall, then we could start seeing like higher highs and whatnot for Tesla. Okay. Again, though, it's very risky. Usually sales happen fast up here in this area, right? Like it'll go up, and people who got into the right timing of the entry will make good profit, but man, it sells really fast. So you have to be super careful when you're playing anything in the red bands. We'll go to a 2-hour chart, see if it's in the red bands. So we got some more information through here, right, of a little bit of resistance that we're seeing. This is that squeeze I was talking about. So Tesla has its work cut out for it, right? Because it's running into this stronger, time frame of resistance, then we might see a pullback. Okay, so those are important things to follow. Let's see if the 4-hour chart's giving us information. So a little bit of, so we know that level, let's actually plot that level. So we could put a line on that level. If it's not there, it might be there. And the guys that attended the class last time, we were right, weren't we? On our Tesla prediction. Because it broke through all those levels that we were looking at before. So this level right here, this 921, would need to get over here to confirm up to 1,000. That's how I would look at this right now. So if we get over 921, then the next gap that we see, it's a big one, is like 1138, right? So it gets a little obtruded sometime. But I also like to use the zero factor here. If you look to the right, the price has 0 on it. And we have the bands stretched out enough to show the 0 on the bands, right? It's down here somewhere. So now we have these like kind of, I call the end all be all support resistance levels. Meaning if it broke, one of these levels, we'd be going to levels that don't really seem probable at the moment, right? Um, and again, it's really easy. We just have to go back to that settings and drop the multiplier down. Once it leaves that zero zone, right, and we can plot that zone, or I'll try to. So we'll plot that zone right there if it lets me. No? Okay. That's awesome. Whatever. All right. So I can move this until it's no longer on the zero. So right here, it's no longer on that zero. So I'll go back to where it's on the zero. So it's on the zero through all these. Okay. And all this does really is it gives us a little bit of an idea of where Tesla might hit some strong resistant levels. Okay. So all these levels here are in the zero. I would actually say this level right here is pretty strong. And the reason why is because you see where there's these green bands right here, right? Where the actual buy-in was like down here somewhere at 452. And then it got into this like upper channel, right? And now it's in the red bands again. And this is when it starts getting overbought. And this is where our resistance is, all through here. So if we break all through here, little bit right there at that 960, then we can get up into the thousands, right? So what would be our best idea for this particular uh, you know outlook for Tesla? It might be one of those situations where we want to wait, right? We probably don't want to get into calls, just because we know that it's already in a strong area of resistance. So what we could do is see if it will create a support back at 895, and if it breaks 895, then we know that its next support is down here at 848, right? So if those levels break on us, meaning the price just starts like rejecting going this way again, then our next entry would be right through here, right? And then of course our if it fails this, then we got to go to different time frames to see if we can find another support somewhere. Because we have all this like open area, this gray area, we don't know where it could bounce in this area, right? We have to go to another time frame to get some more information, which is pretty easy, right? That little mark that I did went right into the green bands right here. So that's sort of what I look at when I'm checking out these stocks. You got to be a creative thinker uh, when you're dealing stuff like this. So does that make sense? So what's cool though is right now, like the what I'm looking at, because there is a little bias when it comes to looking at the bands. But what I'm looking at right now is resistance at 923. But is Tesla a sell according to the Omni range? Okay, let's take a look. So right now we're in that same zone that it rejected before, right? So we know this 905.53 is a pretty critical support because if it breaks it, then it's going to retest some of these already tested levels again, right? So let's try to see if it's sold anywhere yet. No sells yet. Still a hold. And that's what's cool about the Omni range is it gives us a little bit of areas of new support resistance that we didn't see before. Like right here. There's another one here at 908, right? So that's even closer for us. So we'd say, oh, if it breaks 908, it's probably going to retest 905. And if it breaks that, then we have a larger drop down. All right. So there is interesting because it's been going sideways for quite a bit, right? Because of the after hours, not a lot of volume. So it's possible we could see a gap up. Obviously, we're going to look at our futures data tonight and see how futures looks, right? Because if futures is super bullish, then maybe we will see a gap up on Tesla. But if it's bearish, then we kind of know what our levels are already. We already got those levels plotted. And you can use that same analogy when you're looking at other stocks too. So in the conclusion of when we talk about consistency and stuff, what we're looking at is just solid entries, right? We're not going to get into an entry because they say so. We're going to get into an entry because it's correct on the algorithms. And if we go off that and we do that constantly, then we'll yield higher results. Same with SPY, you know. So on this chart here, you see that, you know, SPY was bullish, right? It dropped up and it hit some resistance levels right here at this price, you know, and it's coming back down maybe, right? The 451. This 452.56 is what I'm looking for. So if it gets that, we're going to test this level here at 456. But you can see where there's strong resistance again, right? So the only way we can get through that resistance is gapping up. If we gap through this mess, then we can get up to the 460s and stuff by next week. So those are things I also look at. You know, how powerful are the gap up? Is the gap up going to be? All right. Before I end this, do we got any questions, comments? Klitsch, I know you want to say something. I have to. Yeah, it's a better name. The updates, it's almost there. Yeah, that's that hurts my feelings. That's all you have to say. But what's your opinion on consistency? Do you think what I'm saying is true? I don't know if you got that part this in the beginning. Okay. Oh yeah, yeah, yeah. That's right. I know what you're talking about. Yeah, man. But basically I was saying like um can you be consistent when it comes to finance? And the answer is no, you can't. So I was waiting for the pickets to come out, you know, the fork picks and whatever, and say, "Oh, you're wrong, links, blah blah blah. You don't know what you're talking about." But the information or the tools that we have, like using a stop loss or averaging down, is not going to make you consistent. So we shouldn't worry about being consistent. We should just get in our entries on what the algorithm is saying, right? If it's saying the price is in the green band, then there's an 80% chance the price is going to go up. So we don't chase our entries, we wait for our entries to present themselves, and then we capitalize on that, right? But stop losses and all the other shenanigans, fairy tale astrology shit does not work. Okay. I mean, why are we getting computer science degrees and math and stuff and going into quantitative finance if all we had to do was like look at the moon. Look at the moon. Oh my God, it's a full moon. I'm going to get into this trade and I'm going to make sure I have my stop loss though. Oh man. So, but is there any stocks that you're looking at next week? Yeah. Mm-hmm. Hmm. Okay. Yeah. So Boeing has earnings, right? Okay. So so Boeing, right? So people are like, oh man, I don't trust Boeing. I don't care about that. Like I don't know anything about like the internals of that company. Um, I'm just looking for an opportunity to get into some calls, right? And it was kind of like the same thing that when I was talking to Clint about, right? Because he's all like, "Well, 217 is a strong resistance." I'm like, "Okay, well, I'll note that. Thank you, appreciate that." But I can still get into some entries if I believe the price is going to go that direction because there's a high probability for the price to go that direction. So there's a high probability for Boeing to go up if it's in the green band. And that's kind of what we're looking at. But see, the good news and the beautiful thing with Nessie or Omni Range is we don't have to play it yet, right? We can wait until it gets over this 214.43 zone, then we can play it because we have a little more room for that, that open range area, this 223 that we're seeing, right? And if we were to plot the 223 again on this chart, then we can look back and see where the stronger resistance was. Okay. So we know that 223 would be maybe another area where they would take profit again. Mm-hmm. Mm-hmm. So, and you can see it's a pretty strong resistance too, even changing it to this time frame. Same thing. But there is room for Boeing to still drop. So the question is Boeing bullish or bearish? It's still bearish. Until it can get past that level, at least past this level here, then we can play it. So that would be my entry. And 214 over that, then we can probably try those 220 calls. And there's another little resistance here at 218. So what else you got? You said Fedex. Fedex. So many. Is there any like earnings? Yeah, it is. Is there any earnings next week? Anything? Oh, interesting. So, wow, Omni Range is saying it's a sell. But here's the thing about this: when it does this right here, and I hate this, right? Because I hate when people try to persuade you of something when it's supposed to be doing something else. But because price is random, even when the Omni Range is rendering a sell, like it is right here, like this was your best opportunity to to get into this at 227, and now they've been selling it up here, right? So if it's still a sell, then what we can do is verify these two resistance zones here. So we got a resistance zone at 233 and another one at 234. And what I like to do is I like to compare these zones with the bands, if it will let me. I've been having some issues with the drawing thing today. So you can see it's kind of in a squeeze, right? And I don't know if you heard earlier about the whole whale thing and the little fishes on the bands. It really is kind of though. Like if you think whale is big money, um, they're the ones really moving this asset. Like if it wasn't for these whales, Boeing would be going down, right? So we're using their supports that they're providing us, or not, sorry, FedEx. But same instance, same example though. I mean, you can use it for anything. But we're using their resistance and supports to help us with this trade here. Right now, we're at a 50-50 for FedEx. Okay, because it's teasing this very exploitable area. So for me, a confirmation to get at least up to here to 237 would be getting above 234. So the window for profit is kind of low. We'll try on a lower time frame. So it is kind of flat, right? Like it looks like it's trying to move up. So there's that two. So we got a 240 zone. That's not realistic. So to make it a little more realistic for profit wise, we'll drop it down until we start seeing different levels kind of accumulate in one spot, right? So 238, 237. Like we go all the way up. I mean, there's 240. I mean, I can't like ignore that, but everything else is squeezing. Even if on like this one here, we got 240. So maybe 240 calls for FedEx. The reason why I'm saying it this way, right, is I want to know if I do get into this trade, right, which is a more riskier trade than usual. My my probability for it going up would be over this price right here at 234. So once it got over 234, then I believe they're going to push it up to 240, right? So if I want to get puts on this, it would be if it stays below this level of 233, where then maybe they'll try to retest it here at 229 again, right? So those are kind of things that I look at when it's in these very odd levels, and that's where we're seeing right now. And you could probably go to like a higher time frame and see some more information. Yeah, so you can see that it's this is a pretty big area, big gray spot. So we'll see if it wants to break above that or not. But that's the critical zone for me, buddy. Mm-hmm. Yeah, what are you looking at for SPY? Yep. Mm-hmm. Yeah, I mean, oh, gotcha. Yeah, see if there's any money moving in. Yeah. Right. So a good way you can kind of do a predicted thing, and what's really cool with with these variance bands, since they are like they don't have as much noise. You can kind of use them as like a channel, and I do this all the time where I'll just draw a couple lines where I think where the bands are going to keep moving, and then we can did it did it give you some results? Okay, good. Well, sorry, my wife made me a sandwich. But basically, two things are going to happen, right? Either we establish support over 452, and they're going to really try to push it up to 460 this week. And let's see how long that would take. Mm, let's just see if we go through this route here. So that puts us out Tuesday or Wednesday. Okay. If we go this route right through here. Now, the reason why I kind of like this projection is because it did bounce before right here. So it kind of gives itself it it kind of reveals its hand, if you will, of selling if it doesn't bounce at these previous levels. So, like anybody else, nobody else can see these, right? If they don't have the bands, they can't see that these were significant areas of bouncing. So, and that's what I try to convey is like most technical indicators out there are garbage, and it's because they've been overused. And it all goes back to if someone's trying to get their order filled and they're using the same strategy as the other person, how are they going to do that? Right? Like, so, strategies that aren't being utilized by the whole world can still be viable in a way. So, those are things I was looking at, and of course, a lot of back testing. That's very important. But this could happen here, something like this. But we know if it breaks this like 49,000 zone, the next area that it tested was right through here at this level, which technically, if it did hit this level, it's still higher than this level. So that would still be bullish. But if it broke this level here, then it's bearish, right? So those are things I look at. Now, is it completely bearish if it breaks that level? No. It would be retesting that deviation again. So really it'd be a second deviated area right through here. That means that we're completely bullish or bearish. So these are kind of the the middle level here, the minimal, and then the max at this 466 or 464. That's kind of what I'm looking at for SPY. That's usually what I talk about in my videos too. And of course, I always pay attention to our VXX just because it isn't in the green bands. And the rule of thumb is 80% probability of going up if it's in the green bands. And look what's happening. Like we're getting into a squeeze. Now, if it drops, then it's going to go much lower, right? We're going to go and retest down here. But if it can break above this, then it might want to retest that, 25 range or whatever, where it rejected before. So those are things I look at. Let's see if Omni is saying a buy right now. So no, it's not saying a buy, but it is showing that the signal is oversold, which it usually is oversold. But it's just how the whole instrument's built. But we can still get some information off this. Even our little mark that we did is very similar to this price here. So over 22.22, VIX is going to move up. That means SPY is going down. That's how I see that level. So if you wanted to, you could just create your own alert off this, and that way it kind of reminds you what's going on. And it might be one of those things where it goes up, and maybe, let's see, we got a little resistance right there at this 23. If it hits 23 and starts rejecting, then maybe that's when we want to get into SPY calls. So what about Facebook? I know Facebook has earnings. Oh, they had earnings. My bad. Someone was saying they were going to have earnings. So it's currently it's a sell right now, and you can kind of see why, because it's been downtrending through here, and it's a 50-50 for this chart. So it could drop down here at 309, or try to test this 330 again, and then move up to 354. Let's see if we can find another one with some more information. So was Amazon a sell? Well, and see, the same metric applied, right? Like it sold because it got into the red bands. Like it might have carried, the price higher, but it's still going to drop. And that's what happened. So we always pay attention to when it gets into the red bands as an opportunity to start selling. So, and if we look at that level where it's at currently right now, that was like right when it entered into this overbought zone at that time frame. So if we get into this level, we're making like, would that be new highs for Amazon? I don't even know. But we'll have to see. I have a critical line right through here, this 3307. So, and that's right damn near close to this deviation. So we'll see what it wants to do when it hits that. Let's see if it's on like, oops, what it looks like on the bands here. So you can see it's still been in a sell. Now we're getting out of that sell zone, right? And this is where it's kind of, yeah. So, I mean, that's a nasty drop if it sells, though. That's why it's 50-50. They don't want anybody to guess this direction. So you'll have to really pay attention to what Amazon's doing before earnings. So we can say, if they have let's see if they have a chart. Yeah, look, it's all 50-50. It's if it goes down to 29.59, then it can go, really low. If it goes up, it's gonna meet an all-time high. Nope, it's gonna hit that previous high if it wants to go up again. And of course, the 2-day chart. Not a lot of people use this one. Yeah, but this is definitely, you can see where resistance is at 3503, and a little bit of resistance at 3545. So over those two levels, then we can get into those higher highs for Amazon. That's what I'm seeing on that one. Yeah. It's still bearish right now. You could see though, like here was your sell, and there's another resistance right here, or you can call it resistance or support. Right now it's resistance because it's under, but it's super close though. So that might be a level that we can track too. I mean, it's all we got, man. It's for information. They don't give us much, do they? No. All the other stuff is overused. It's exploitable. It doesn't work anymore. So we just got to lean on these algorithms. Let's see here. So there's those two levels that I'm talking about. So if it does, break this level here that it's testing, and it doesn't bounce here, then we're going to go a lot lower. So, maybe in this zone through here, this 3,200. But if it stays in this zone here and it creates a range, and that's why we call it omni range, it's because it's basically creating a range through here. Then maybe it'll start trying to move up once it holds some support. But you can see it's not like on this time frame, it's nothing exciting. So we'll have to see what this earnings does, man. If it's like a super big push up, they would have to gap up. Like, see how they gap down right through here? So it kind of like skipped the resistance zone completely, or the support zone. So we got to watch for those things to happen. So if they, really want to push this thing, they got to push it above that resistance to go higher. They know it's a risky play. So anything that has a high return is risky. It's all about that Sharpe ratio. You know about that, right? You know about Sharpe ratios? It's good. It's good. You got to teach these guys, if I'm not here, about how it works. Sharpe ratios. So yeah, Hood. I'm looking at Hood. For Hood, it's pretty simple. I'm just going to wait for some kind of confirmation from the line. Let me see if it. No, see, there's no confirmation yet. Even if I go by that previous resistance here, I mean, we could, but see, that's what happens sometimes, right? Even when it's in the low bands, which is still a probability that it's going to go up, but then it meets that, that resistance. So it could do something like this, hit here, and then start climbing back down until it squeezes back up again. So we can either, Oh, DWAC, huh? Yeah, so there was a pretty, they sold the shit out of this thing. It sucked because I was in fun and it kept having circuit breakers. I actually had to phone call Thinkorswim and tell them to give me my entry or my exit because they were saying no, you didn't, that wasn't. I was like, yeah, it was, look. So I had to fight for it because they were trying to say, huh, that something went up 2,000%. Oh my goodness, you're a lucky man. Yeah, you're a lucky man for sure. So let's see what information we have for this guy. So it's in the green. Obviously, it sold quite a bit. So if it wants to play like it did before, and hit like 107 or something, is that higher than the previous? If we hit right here, no. Let me see if I got another time frame. Yeah. So the mean reversion is around here somewhere. This $38. So we'll see if they want to either try to retest this $90 to try to go up higher, right? But they're going to hit the same resistance again. But again, when the price is moving in real time, that's going to change, or it rejects this level and keeps going lower. Does Nessie even show? Yeah, Nessie just says sell. Nessie's too smart. I mean, if we would have known like to sell right there. But we do have this little bit of resistance here. So we could plot that line. This is going to be a safer entry. And that's exactly where that VWAP is. So we got a little correlation going on. So you can see there, you can't see it on that chart, of course. So we see, you see where that correlation is? So if we can get over this line, this price right here, that $93, that might be a safer entry for, making new highs. It's kind of risky at this level here just because we're under a sell right now. So we won't even touch this thing until it at least tries to retest something like that. Unless it gives me any more information. No, see, it's still showing a sell. There's your squeeze right through here. But this could also be creating a new resistance. So it's having a little bit of issues getting above this price right here. So if we get, let's just say, like, theoretically, how we can play this out is it gets above this price here, 81, and then it tries to test that 93 zone in the pre-market, right? We might see like pre-market activity happen, or it just keeps going down to 40. So that's what's cool about Omni Range, is it has all these different levels we couldn't see before, but we can see now. So, all right, I'm gonna finish my sandwich. This time though, I got this recorded, so I'll post it on my YouTube. Cool. I appreciate you guys hanging out with me today. Sorry if I disappointed some of you that think the other indicators work, because they don't, and that technical analysis is junk. But hey, I'll see you guys tomorrow.